Folks, welcome to Best Stock Charts for the coming week. This is Bob Desmond at the Contrarian Trader, and it is August the 4th, 2018. Let's begin today off with a rundown of what we'll be doing. First, we're going to go over a call that I made last week on AWX. I'll play you a clip of what I said last Saturday on Best Stock Charts. If you're not currently receiving Best Stock Charts in your email, never miss an episode by just entering your email address in that annoying pop-up box that appears on the website when you try to leave, or anywhere else on the website. You can enter your email address and you'll get it. We'll go over the call on AWX, how that played out. Then we'll talk a little bit about the jobs data from yesterday, being Friday, and then we'll talk about the stocks that we like going into the new trading week. Now, members, tomorrow being Sunday, we're going to send out two members. If you're not currently a member, sign up for the 14-day free trial offer. Best stock charts for the week ahead commentary. That's where we review the strategy that we have employed, what tweaks we will make moving into the next trading week, how our positions look. Do we want to add? Are we moving our stops up or down on our positions to minimize our risk and maximize reward? And then we'll do a deep dive into the stocks that I'm going to narrow down on Best Stock Charts to do a deep dive. How are the multi-period charts looking? Meaning, if I talk about a weekly chart on Best Stock Charts, we're going to want to take a look at, yes, the weekly chart, but the daily chart and perhaps even the intraday charts. If I talk about a daily chart, well, then we're going to want to take a look at the higher level view, weekly, monthly charts, and perhaps intraday charts. So let's get to it. The first stock we're going to talk about today is AWX. Now, here's what I had to say last week on Best Stock Charts. I'll link to it at the end of this video if you're watching it on YouTube, or if you watch this on the vlog on my website, you can just go to Best Stock Charts for July the 27th. Here's what I had to say about AWX. A couple of extreme trades that I'm watching. This is a daily chart of AWX, Avalon Holdings. We have RSI at 96.53. I look for news on this spike higher, why this stock broke out. I couldn't find any. So what I'm guessing here is a probable pump. So now we're waiting for the inevitable dump, because absent a takeover, this rally, this pump higher is simply unsustainable. We're trading above the 3 standard deviation Bollinger Band. You did see some sellers move in on Friday. Huge volume. Huge volume. This is institutional accumulation. So something's going on here. If anybody has any news on this company, I looked. I can't find any. I didn't look all that hard, though, I got to admit. I just looked on Yahoo Finance, which has gone completely to garbage. But I digress. ADX is incredible. The signal line is at 80. It's nuts. So this is highly unsustainable. There's got to be something going on here. And if I can get to borrow, and there is nothing going on that I know of, I'll look to short the shares. So fast forward to Monday, and the shares doubled in the first few minutes of trade from where they closed on the prior Friday. Now, I tried to get to borrow. I just couldn't get to borrow, which caused me to, A, take a look at how many shares are outstanding and what is the float. The total number of shares outstanding, this is from Yahoo Finance, are 3.19 million shares. Of those 3.19 million shares, only 2.3 million are eligible for trade on the New York Stock Exchange. Now, when you take a look at the 3-month moving average, the average daily volume is way less than 1 million shares per day. However, this hasn't changed much. Over the past 10 days, the average daily volume is 6.24 million. So going back to the chart, I misspoke last week. This wasn't institutional accumulation. This was a massive pump and dump. In all probability, you had a penny stock newsletter go out, a bunch of knuckleheads in a chat room somewhere hyping up the stock, and that put the shares in play. You could see that on the 27th of July, the shares traded 12 million shares in a day, but there are only 2.3 million shares that are eligible for trade. They changed hands 6 times that day. So all this was massive day trading, either by computers and, of course, the day trading community. So fast forward to the outcome. I did try to get shares on Monday, unable to. And the shares just collapsed. And I warned that in all probability on market wrap here, that we would fall back down into this base. Now, we are bouncing off the top of the base, but we are holding. I'm not going to be the least bit surprised to see another move higher here. I think inevitably it will fail, but we look poised right now to attempt another move higher on AWX. So we may be buyers of AWX, assuming that it doesn't gap up on Monday with a stop right below last week's lows. And with all these trades, of course, we do send out alerts to our members. Moving on, last week I spoke about DLX as an extreme oversold stock. The RSI at that time was around 13 and a half. And you can see that we're putting in a nice double bottom setup here on DLX. So members, what we're going to do is we're going to take a look tomorrow on the week ahead commentary at the higher level view charts to identify where there is historical support. And is the time right to put on a long trade? You could see that you have RSI, which is putting in a higher low now and rising. Stokes forming a double bottom setup. Volume on Friday was good, and we did recapture a support level. You had bottoming tails back here, which implies that you have support below. So while we're not out of the woods here yet on DLX, the odds of a favorable outcome of a long trade are improving dramatically versus last week. Now, these are not long-term trades, folks. This is going to be a short-term swing trade to the upside, and then we're out. Because in all probability, the path of least resistance, which is down, will resume. So don't stick around too long to the long side. Continuing on with the extreme oversold stocks, I think I have 3 more to go, and then we'll segue into the momentum stocks that we're watching for the coming week. So if the extreme oversold stocks don't get you excited, stick around for the momentum stocks. I have a few good ones that I'm sure you'll like. So the next chart up is Nielsen, symbol NLSN. Everybody knows of this company. Now we have RSI, which is very similar to the setup here on DLX, whereas you have a higher low getting put in. RSI at current is at 19.56. We're well off the lows of the month so far, or I should say of the summer. The low being put in back in July. We have rallied. Now we're pulling back, and the question then becomes, do we hold this support level at 2053? Or do we put in a higher low and create a situation where we can enter it as a long trade, or do we break down and form new lower lows? So the jury's out. I don't think that we're done consolidating here. Volume is still above average, so you still have some institutional distribution. Stokes are rolling over. We'll be looking for a higher low here. So while I like Nielsen, I'm not ready yet to go buying the shares. I'm not convinced that we have a confirmed bottom, but we're close. Now, what will negate us being close to a bottom if we undercut the 2053 level and close there? Red Robin Gourmet Burgers. I love their burgers. Daily chart, we have RSI at 18.66, which is really not an extreme oversold number. I prefer for me to consider a stock to be at extreme oversold levels down at the 17 or lower level. But we're close, and we are trading down below, or at, I should say now, the third standard deviation Bollinger Band in red, where it's simply not supposed to be. Does that necessarily mean that we get a pop on Monday? No, it could just trade sideways, thus alleviating that, let's call it an oversold condition relative to the third standard deviation Bollinger Band and proceed lower. And in all probability, it will. I don't think the time is right for traders to go in and buying these shares. Now, we gapped down back in May. We consolidated, held this support level, but it failed to hold. My guess is, I haven't looked yet, but I will. This was an earnings report, and the earnings report was not received well by the street. Now, big down volume, but there was no follow-through on Friday. But I'm not ready yet to go buying these shares. Before I did so, I would need to take a look at the weekly or monthly charts, perhaps both, to identify where there is historical support. So in all probability, we'll be doing that tomorrow on the week ahead commentary with members. Cedar Fair, fund the symbol, FUN. Another extreme oversold stock, RSI 17.14. I think that we're heading lower here. I don't think it's time to buy these shares, despite the fact that the quote-unquote oversold indicator, RSI, which is really not supposed to be used as purely as an oversold indicator, but that's how it's marketed by the trading is easy crowd. So for these shares here, we would, of course, pull back, take a look at the higher level view, weekly, monthly charts, and identify where there is historical support. Why is that important? It's important because you have institutional distribution, right? So you have your Fidelities of the world selling shares. Now, if you get in front of this moving train of volume, you're going to get wiped out. Now, if you buy at a historical support level, and when these volume bars to the downside anyway fall at or below the 3-month moving average, well then, the risk versus reward of you profiting on that trade is considerably higher. Why? It's because you have reserves. You have people of like mind looking to buy shares at a historical support level. It's as simple as that. So your odds of profitability increase dramatically, whereas right now, where we closed on Friday was not good. We closed at the lows of the day. We attempted to rally. It was rebuffed. It was rejected. You had a bearish key reversal on the day. Not good. The probability of continuation move lower is very high. I would not get in front of this moving train wreck quite yet. I think we are going to see lower lows. Members, more to come on FUN. Now, my first momentum stock is SHOO, Steve Madden. I've spoken about this a couple of times on Swing Trading Today this past week and with members. If you're not currently a subscriber to my YouTube channel, get notified of when I do Swing Trading Today, which is in the very early hours in the morning. I go over stocks that our members submitted for me to review, gold members, and of course, stocks that we're watching, as well as my commentary on the pre-market activity. So click that bell button on YouTube. That'll send you a notification of when I post Swing Trading Today. Subscribe to my YouTube channel. And if you would, click that like button. And I really appreciate those folks who gave me a like and subscribed this past week to the channel. I appreciate it very much. Thank you. It does not go unnoticed, and appreciated, of course. Back to SHOO. We expected a breakout. We got the breakout. Now we're looking for a pullback further and a retest of the support level. Then we'll be looking for a breakout. So SHOO is looking really good on a daily basis. It's just that we haven't broken out to new all-time highs yet on SHOO. And it's at that point in time where we'll want to add a bit more aggressively because we have no overhead supply above after we get through 56.70. So we'll be looking to open up a position next week on SHOO. Grubhub, daily chart. We booked profits on Grubhub on this earnings gap higher. And thank goodness that we did. We've retraced a considerable portion of that rally higher. Now what I'm looking for is a double bottom retest of support. If it holds, great. We'll reopen our position and look to add more on a breakout and a close above this upper band of resistance. It appears as though we are putting in a higher low on RSI and perhaps a double bottom setup or a W formation. Volume to the downside is dropping off dramatically, which is good. However, up volume is declining as well. So a bit of a concern. We have some bearish divergences going on here with Stokes here and with Ultimate Oscillator, but that's kind of to be expected when you're in a trading range. So I'm not going to put all that much emphasis on these indicators until such time that Stokes close down below the 50 level. Then I'll get a bit concerned. However, if we form a double bottom setup above 50 on Stokes, that's exciting stuff, and we will look to reopen our position on Grubhub to the long side. Herbalife, weekly chart. HLF is looking really good. I want to talk about the indicators first. RSI, double bottom setup and a breakout last week. Stokes, a double bottom setup, no breakout yet, but my guess is that we will get a follow through this coming week. We did break out on price as well. Now, what might happen here is we may retrace a portion of this breakout to as far down as a retest of the support level, which is at current about $55 per share. Now, would I be surprised if we just got a continuation move higher? No, this is a really good looking chart. And we broke out last week on volume. So Herbalife is looking really good. Mercado Libre, weekly chart, MELI, the symbol. We attempted a breakout 3 weeks ago. That breakout was rejected. And using that data point, the 381.50 high, we're now able to identify where our resistance level is. So what we want to do is open up a position on Mercado Libre on a pullback and a retest of the support level, or of this support level, or I should say, on a breakout above this upper band of resistance. So I think that the path of least resistance in all probability remains higher. The one concern I have here is that we have, in fact, formed a lower high. That can't be ignored. Now, if we break down below this lower band of support here at 284.37, the trend has changed. And we will have a stock that is now in a downtrend. So let's just make certain that if we're using these support levels as our rationale, defense of these support levels as our rationale for opening up a trade, that we use a stop loss right below. And then we'll buy more on a rally up and through the upper band of resistance. We have a breakout in RSI, looking good. Stokes, both lines trading above the 50 level, looking good. Down volume, declining and below average, really good. So MELI, possible long for the new trading week. Lululemon. Now, we predicted a breakout on Lululemon all the way back here where I drew this bull flag formation. Look at how far we've come. Now, last week, since we're on the weekly chart, let's talk about it. Last week, we flashed an outside reversal week. Very, very bullish stuff. Let's throw a new line up here. So what we'll be looking for is a rally up and through this upper band of resistance. And that sets the stage for a continuation breakout higher. And while these indicators are a bit long in the tooth, people are going to say RSI is overbought, Stokes are overbought. The same thing could have been said back here, So they can remain overbought for a considerable period of time. We want to watch price and volume action. Those trump the indicators. You want to use your indicators to identify divergences. Are we breaking out to new higher highs on price, yet RSI is making lower highs and lower lows? Same deal for Stokes. Those are bearish divergences. That's what we want to use these indicators for. Next chart up. EC, Echo Petrol, I tried. Echo Petrol, SA, there you go. Weekly chart. So a huge base here. We have formed almost an entire right side of a base, forming a cup. Now we are, what I believe, forming a handle and possibly a breakout of this bull flag setup. I think the shares are a buy on a rally and a close above the 23.34 level. Stokes are hooking up, but both lines on Stokes are down below the 50 level. That's a concern. I need to see at least the fast line above 50. RSI is above 50 and rising. Good stuff. Volume light last week. That's a concern. So EC looking good. On a weekly basis, members, we may be checking out a daily chart tomorrow. BHP Billiton, weekly chart. We spoke about this one last week. We had a breakout. I said that I like the shares on a pullback and a retest of support or on a breakout. Looks like we're retesting support. We held. We rallied off the lows of the week. These shares can be nibbled on. However, I wouldn't get overly aggressive with the position until we rallied and closed above this upper band of resistance here. Now, these shares are susceptible. I went over this last week to a sell-off on a strong dollar. Now, the dollar rallied last week and BHP was down. The dollar on a weekly basis, I'll discuss the economic charts with members tomorrow. The dollar closed very strong on the week and flashed a bullish reversal week and broke out on a daily basis. So the stage is set for a continuation breakout on the dollar. That will put pressure on BHP. Now, people are talking about the jobs data missing yesterday. What they need to take into account was that the two prior reports were revised measurably higher. And what skewed the numbers for July were the layoffs at Toys R Us. So net job growth remains strong. That'll continue to provide a floor, a rising floor of support on the US dollar. So just be careful when you're trading these commodity trades because they are susceptible to a strong US dollar. I don't want to see anybody losing money. You don't need to be a member to have me concerned about that. The last chart up today is Advanced Autoparts, another momentum trade. We have a breakout here on AAP. We broke out above 142.50, but we didn't have volume. And in fact, volume declined versus Thursday's volume. That's a bit of a concern. So we may retest here 142.50. But I think those shares can be bought with a stop right below that support level. And of course, members, we will be sending out an alert when we open up that trade or close out that trade. And that is it for this week, folks. If you are not currently a member, sign up for the 14-day free trial offer. You have nothing to lose. Canceling is easy. Click a button. If you're not ready yet, that's cool. Just follow me on YouTube. And if you found us through Facebook, Twitter, Seeking Alpha, Yahoo Finance, follow us there. Everybody have a profitable trading week next week and enjoy the remainder of your weekend. Be well.